Is the May hike going to be the last hike of this cycle?
Look, I think it remains to be seen. Right now, that's certainly what the market is pricing. I think that, as some of your earlier guests in the preview to this mentioned, we're in this period where the market, particularly the equity markets, are just defying Fed guidance and Fed rhetoric. And as a result, I think to prove their resolve, there is not a zero chance that they keep going. And so, with the data the way it is, certainly we can be constructive that inflation is on the right track and that there does seem to be some weakening in the labor market. But this is not by any stretch mission accomplished. And we could come back to look at this if they do pause as a moment of very big mistake.
The market has become very comfortable with the idea of rate cuts. It's supportive of risk assets. We spent much less time talking about being uncomfortable with why they might be cutting. I sense from you, Lisa, repeatedly that you're focused more on the latter and not on the former.
No, exactly right. And Jonathan, I know, that we've been talking about a narrative around, suddenly bad news actually becoming bad for equities, where, the reason that the Fed might be cutting, that the reason rates are declining is that demand, not just disinflation, but the demand side and volumes are beginning to decline and decline quickly. And so there are real, genuine implications of those things for corporate earnings. And that is a scenario, despite all the, high-fiving about potential rate cuts, that we don't see expressed explicitly in the equity market estimates.
Lisa, how does that stack up with what you've heard from earnings so far? I know it's super early on with just the big banks behind us and tech coming up next week, but what's the takeaway so far?
Yeah, look, I think that, so far earnings have been mixed at best. I think that, certainly we've had, to your point, a sector mix issue here that has prevented a material meltdown. But we've had some big names missing on fundamental things like demand, like pricing, like margins. And I think that the more those messages start being communicated, and people wrap their heads around this idea that Q1 2023 is highly unlikely to be the trough in earnings for many businesses that have economic exposure, which even including mega cap tech is most. I think we'll be able to make some progress here in setting realistic expectations.
Well, smaller